responses.
Well, I do remember in those days,
Mm-hmm.
we had a preaching captain, and he would come over, and more often
Good morning, good morning, good afternoon, and good evening. This is Doc from North America, and Robin. It's the two of us just yakking away today. So,
bye-bye.
bye-bye, Robin. So, what do we have today? Well, first of all, I think yesterday is a very good example. Oh, let's put the charts up. I thought yesterday was a very, very good example of the market itself. We were moving back. I want to say it's like back to the future. And it's what it is. It's come down to we're finally getting back to some type of norm, which for a long while we've been out of since 2008, since the beginning of QE. And yesterday I saw a normal market. I know. How can Doc claim that's a normal market? Well, it was just a little sell-off, 2 or 3%, 2.5%, that type of thing. It was relatively orderly. It ebbed and flowed, like as if there was buyers and sellers that were real buyers and sellers. And then as the afternoon went on, it wasn't like in like 10 minutes that all of a sudden the market went from 11 down 1,100 points on the Dow Jones Industrial Average. Remember, this is DocDow here, so that's where I got my nickname. What it really came down to is it went up from down 800 points, went up to 400 points. I'm sorry, down to 400 points, then turned around. Then it went to down 900 points, and it went back to only down 600 points. And it ebbed and flowed the way markets are supposed to ebb and flow. Buyers against sellers, more buyers against less sellers, more sellers against less buyers. That's the way markets are supposed to work, minus the Federal Reserve being the buyer of last resort. It ebbed and flowed to the point where we got only down about 400 points, and then the market fell down 1,100 points on the Dow Jones Industrial Average. And the rest of the markets were following it, and the currencies were following it. And then it finally stalled out, and in the afternoon, it slowly firmed up. And before you know it, we were only down like 600 points, and you could feel how they were bringing it in, and they were bringing it in more and more. And in other words, there were more buyers than sellers. And it slowly climbed, it was down only 250 points, not in like a 3-minute period where we've seen those crazy moves by the Federal Reserve, where the trading desk of the Federal Reserve just walks in and buys everything instantly. No, it ebbed and flowed. It was money managers out there trying to push, and you could see the volume and the whole bit. And before you know it, the market towards the end of the day was plus. Now today we're back to the minus again. As you can see, I put the chart up there instead of the Swiss on the Chicago Quant right there. Let's see if we can widen this out so you can see it better. You see this is the S&P 500. Yesterday's little sell-off thing going all the way down, and then this morning, we're feeling that pressure again. This is what markets look like in a normal market. In other words, buyers and sellers back and forth throughout a trading day. Not stupid money, which I've been calling it since 2009, where you see no ebb and flow. I keep on saying that. People kind of go like, okay, yeah, right, and then they don't pay attention. Ebb and flow is a way that you have strength in a market and weakness in a market. You see it through the volume and the price rising, or you see it in volume and the price dropping. But in this quantitative easing era since 2008, we don't see that. We've been, in the beginning when I was telling other professional traders, chairmen of exchanges, big players in the marketplace, someone else is out there and it's not us. And they would say, well, who could it be? I said, well, it's the Federal Reserve. And they would go, oh man, you gotta start wearing that tinfoil on your head. You got some crazy ideas in your head. Doc, you're really good, but come on now, the Federal Reserve would never do that. And I was like, well, I don't know who else has the ability to invest in a stupid way. Now, what when you say, okay, stupid way, didn't Biden call somebody stupid yesterday? But in a stupid way means that the product goes up and volume doesn't increase, but it refuses, it just matches sellers. And so they take, what we used to say is they take all that's being sold. And then when the sellers are exhausted because the price doesn't go down, but the volume hasn't increased, they they don't know what to do. In other words, the normal ebb and flow is volume increases, buyers are increasing, volume is increasing, buyers are increasing. It does that thing. And vice versa on the downside. Volume is increasing, markets are dropping. And so then the retail or the institutions have a general idea what's going on. But in this case, we didn't have that. All they did is matched. They constantly matched the selling. So in other words, they matched all the selling by matching with buying, but not increasing the volume in any real way. And I said to myself, this doesn't make any sense. This is not normal. In other words, I know I'm going to say this out loud to a lot of you out there, but buy low, sell high. You ever hear that concept? That was the way the markets worked for a long, long time, thousands of years. What they did is they tried to buy low and sell high. Or you tried to sell it high as a short to buy it back cheaper. But we lost that in the quantitative easing era here. We've lost that. That's why the fundamentals don't work anymore. And so yesterday we had a normal market, which was very nice to see. Down 2.5, 2.75%, something like that. Not bad. And for the high tech stocks, the Tech 100 on Dukascopy, it was down 700 points. That is a little bit more extreme, but that index has historically always been extreme. So in essence, it was normal. Now today we come in, you can see the markets. I'm showing you there the S&P 500 because it's really the global index. You see it's moving back down again. Now, will it go challenge this low? I would imagine this low is going to be a very important low. We'll watch that. I'm not totally convinced that anything yesterday was more than just normal buying and selling. That's it. And that's pretty much what today's title will probably be in the end result is that buying and selling back to normal. And that is the truth of it all. At least as far as Doc can see the truth. And I'm a data-based person. I'm not a real theoretical person as much as I can do theoretical concepts. I am basically, I live and die by data, real data. In other words, it has to be accurate now. It has to be accurate, 3 months from now. It has to be the same accurate data of 3 years from now. In other words, you don't just change it because you don't like it. There's no such thing as changing it because you don't like it. That's not a way of making money. That doesn't work that way. I don't like this, so I'm not going to do that. No, we're database. So anyway, that's where we are. Let's check out the Swiss. Let's see how the Forex is acting today. I have seen how the Euro, which has been disappointing me that it's been kind of weak. I've been like, no, why are you doing that? Don't do that. Now there's the Swiss this morning. As you can see, it is doing that little bounce there. You can see it over here on J4X right there. Same thing. You see it bouncing. The line has not come up yet there. You can see over here on Chicago Quant, we're a couple hours ahead of time. So you can see the strength there. And at the same time, you can see, what's that? Right there. We're starting to actually go into the weekly buy again a little bit there. And I'm like, well, wait a minute here. I thought we were going to finally challenge the bottom end of the range here because I'm looking more, my attitude about it all is that we're probably looking at, what's the words I'm trying to say exactly to be very clear? And that is that I believe the Federal Reserve is going to tighten. And the only way they can tighten, in my mind, is that they have to allow interest rates to rise in Europe and Japan. So you're talking about 15 trillion in assets stuck in the minus, and it needs to get into the plus to get us back to more of the normal market where you buy a bond, they pay you interest. not you buy a bond and you pay them interest. That is upside down and incorrect. And why is that? Some of you might be saying, okay, Doc, explain to us, why is that wrong? Because it destroys price discovery. That's what it comes down to. There's a magical philosophy, it's called price discovery. And what that does is the open market helps to define value. And when you wreck price discovery, now you're really stuck in some type of heavy speculation that doesn't justify price discovery anymore. You have that stupid money in a sense. That's what I call it. I call it stupid money. Anyone who would keep on buying and buying and buying without buying lower is only going to hurt themselves. You need to buy low and sell high. You can dollar cost average, but you don't dollar cost average up, you dollar cost average down. Because if you dollar cost average as it's rising, you end up usually losing. It's very rare. You can hold, you ever look at Elon Musk and some of his stock options, and he exercises those options, and they're he got stock options instead of pay. And, they gave it to him 10 years ago at like $1 a share, at the time the stock was trading at 50 cents a share, and he got stock options, and he holds on to the options. And at some point, options expire. Binaries and options have a half-life, as they say in science, and they will expire, and you need to exercise them before they do. And so, in this case, Elon decided to hold on to his positions in his, Tesla company, and so instead of like when they ran to 50, when they ran to $50 a share, he didn't just go and sell shares out like all of them. Instead, he said, I've got enough money. I've got like $140 million in my pocket from PayPal. I'm just gonna, leave it on the table. That's exactly his words. He said, I'm leaving it on the table, and I'm gonna let them go all the way up to expiration. And sure enough, the stock is trading at $1,100 a share from an exercise of $1 or $7 or $6. He had options on all those low prices. Just recently, he exercised $9 or $10 billion, and it cost him something ridiculous, like $40 million to do it. So that is smart money. Okay, it's speculating, but it's smart money because you're buying low. He wasn't exercising $1,100 options. He was exercising more like $6 options and $1 options and things like that. So that is my example to what stupid money is. They keep on buying higher, higher, and higher. And then when it goes down, you've averaged up, not averaged down, and you lose, lose, and lose. So anyhow, let's go on to the Swissy. You can see there the Swissy, they're starting to turn it back up again, and I'm disappointed because I keep on thinking we're going to get that correction that we're supposed to get from the Federal Reserve, because they are the buyers of last resort now. And you can see it over here, in Chicago Quant, it's trapped in the middle of that range. I guess if we Fibonacci this thing, it keeps on bouncing off the 50 percentile the same way the Euro did. Let's take a look at the Euro. And there is the Euro right there. And let's put it up on Chicago Quant. And you'll probably see, I think we have it Fibonacci'd. Yeah, there it is. And what it did is it ran up to the 50 percentile right there and stalled out. Now it's flirting with the 3/8 kind. It's underneath it. And the last time it stalled out, I guess it was, let's squeeze this a little tighter like that. It almost went down and hit the 0.23, but it came back up. They ran from that. And we still think that they're going to be higher lows. We don't think it's just going to sit docile and roll over, but we are disappointed. We're seeing Swiss flirt with its weekly buy, and we're seeing the Euro now flirt with its weekly sell. And then you can see, the daily for the last couple of days. Where's that? Oh, okay. Yesterday there was a green and a red. Let me just give that a refresh. But I think that is still right. So it was still in the buy. That's what it was. And so today, let's give it a 2-day refresh. Yeah. So today it's going into the sell as we speak right there. So we could actually throw the red line in there because yesterday it closed below the zero line there, and it was a red and a green dot. And the only thing stopping it from being a sell yesterday was this this green dot. And then today, when it opened up higher than where it settled last night, and then started to break the closing price of yesterday, it starts to push it into the sell again. And this time it's following through. So as long as this thing stays down like this, it'll be in a sell. And the weekly's doing that, and we're not happy about seeing that either. So that means that there's some pressure there, which shouldn't really be there. But you know, we're going through a whole new. We're basically back to 2008. The Federal Reserve has inflation it must fight, and they got to figure a way of doing it. There's money managers out there, respectable ones, really saying that the Fed is going to roll over. They're not going to fight the inflation. Well, that's really wild. I can't even imagine them not fighting the inflation. That's beyond my imagination, honestly. I really have a hard time. I can't even conceive the idea that they won't. But the money managers out there are betting on that they won't. And so they came in yesterday and they covered. As we take a sip of our tea here. So that's where we are. We're seeing a little confusion here in the Forex market from it. Because again, the only way that the Federal Reserve can really straighten this all out is to, start pushing interest rates up. The rest of the world join in, start pushing interest rates up. England has already started it. Probably that's why the British pound, in many ways, as much as you can see here, right there, you can see it's been weak. But look at it, it's way oversold. Let's put it up on Chicago Quant. You'll see my example very clearly. It's still holding up in the weekly buy. See that right there? It's refusing to play the weekly trend because they've already started moving the interest rates up. And the only way to get these Forexes, these other pairs trades, to respond correctly to what's going to happen to get rid of the inflation is they need to start pushing up their interest rates. So it's just a matter of time now. We'll see how that plays out. We'll be talking about it here because that's what we watch. And that's the debt bomb, I guess, that they talk about it, like a big bomb, and they call it the debt bomb. Countries have been borrowing and borrowing and borrowing enormous amounts of money. Probably good reason why I'm really happy with what has happened in Turkey. Very impressed with that because it seems to be. I want to call Chairman Powell and say, look what Turkey did. They're giving out free puts. You gave out free puts and pushed the equity market through the roof. Now you need to give out some free puts in the interest rate, like tips. They have a bond product. It's called a tip. What is it? It's supposed to follow inflation, Treasury inflation pricing or something like that. That's why they call it TIP, T-I-P. And what it does is all it does is guarantee interest over, say, inflation. Whatever the inflation indicator is, they guarantee like 1 percentage point or 1.25 percentage point over it. It's discounted. So when you get, all these years we've been like, 1.5%, 2% inflation, they've been paying like 2.5%, 3%, nothing major. Tips have been okay. But now that inflation is actually registered as 7%, that pushes it up to 8.25%, 8.5% out of nowhere. And so tips are really in vogue, and that's where the bond traders are really probably moving towards, but they're probably limiting a certain amount of investing in it. In other words, the Fed only gives out so much of that, and they're probably rolling the fixed interest rate products more than anything else, but they're not probably rolling and regenerating more tips. But they have X amount, there's a rule, they have to produce so many tips a year. It's part of a rule that they developed decades ago when they created tips. Back in the 80s and 90s. So a certain percentage is tips, but I guarantee you they're not pushing any more than they have to because they knew sooner or later inflation was going to come back, and sure enough, it has. Well, let's check the chat line. 47, I see you there. Hey Doc, can you look at Gbp Jpy? Sure, let's see what's going on there. I like looking at pair trade. It's a really good pair trade. There it is right there. There's GBP JPY. You can see we've been in a weekly buy since down over in here. Let's throw it up on J4X too at the same time. GBP JPY. GBP. Let's see, where's it at? There it is. I see it. JPY right there. So you can see, just like, because they're raising interest rates in the exchequer in England, and they've already done it. They've started moving. You know, you see the firmness in there, and so they're not making a challenge. And this probably is a really good buy. You know, it went into the buy there, goes into the sell. Where is it? Right there, right? Okay, so we did a little zigzag, as we like to call it, on the trading floor. A little zigzag. So it goes into the sell there. Then it goes back into the buy there. And we're back into the, there's the buy. And then let's go right back into the sell again. Where's that at? That's right there. So a couple days, they were in the buy. And you actually did make money because we're in a weekly buy. And it went up, and then it rolled over. Good money management keeps those profits one way or the other. And then, you know, we're going into the sell, so you can't be long. We're in a weekly buy. If you're going to be short or in a sell, you got to do it through a binary, or you got to go do it through an option, you know, that type of thing, because you have limited risk and you won't get stopped down. And that's how that works. We talk about that here. And if anybody wants me to explain that deeper, we can. We can elaborate. We can expand on that idea as I take another sip of tea. Oh, that's nice. So there's the GBP JPY. You can see here, looking back historically, it is a good pairs trade. You know? And I think they've moved away from zero in Japan also. You know, they're paying interest now. I think it's only like, or it's breaking even or something like that. I think that maybe they're paying a 1/4 percentage point, or it's flat, that type of thing, but they're not charging bond holders interest anymore, which is close to insanity, really, when you really think about it. Oh, no problem, 47. Glad to do it. We love questions. We love looking at products. You've shown us throughout the last 6 months, when you ask for this product, how good a product it is as a pairs trade. You know, we might even put that in there today. We may talk about this. You know, we'll put that in the title. GBP JPY pairs and back to a normal market. I think that'll be literally the title today of this webinar. Yeah, that could be a really good one there. So let's see, where do we go from there? We were looking at cable, but I was giving kudos to Turkish Lira leading us. Would you believe it? You know what they always say, a broken clock is right twice a day, or, you know, a blind squirrel will find a nut. Well, President Erdogan has started a policy that is logical in my mind, and we're just going to monitor that now. Totally fascinated by it. We are totally 100% fascinated, and I was one of the first to poo-poo it, me and Janos. So I said to Janos, no way this thing works, you know. But no, look at that. It has calmed the product down. You know, we're looking at almost a full month now of quiet trading. It had to oscillate from the wild news. First, they got out of it. You know, they got out of the risk. A lot of traders got out of the risk right there. Then it started to bounce up, and it didn't go after at the top. It hasn't gone after the top. It's locked in a very comfortable lower range. You know, about a 25–30% gain, which is very impressive. And to me, logically, it makes total sense. I mean, honestly, you know, why pay out all that money? Why not just give out free puts, and the government compensates with taxation to the country itself to pay for those puts, and at the same time, the money is still committed to being long Turkish lira, which means they're investing it in Turkey on one level or another. And it's kind of like a supply side economic thing, really. You know, in essence, it's lower taxation. Imagine you were paying billions to prop up your currency. Now you pay only millions. So you've reduced the taxation side of it, which is pretty cool, you know, when you think about it. So instead of the population paying billions, I mean, we've seen their sovereign fund knocked to zero. We've seen, you know, their central bank's cash reserve knocked to zero. Now it's just a simple taxation between the difference of what you paid for Turkish lira and what you lost, and that's all they give you. So to me, you know what? In these times, makes a lot of sense. Didn't in the first 24 hours, but as the days went on, I saw that the bounce was not bouncing back up, and the currency was calming down. And I thought, wow, that's kind of good, you know. And then I read, you know, I kept on saying in the webinar, I have to read to find out exactly what this whole thing's about. Now there was a little, you know, guessing in there. There's no doubt about that. They weren't sure in the beginning who gets the put for free. In other words, was it commercial? Was it industrial? Was it institutional? Was it just public? Obviously, they figured that out to the point where there's confidence in all the whole arena, because we're not seeing any real volatility now. The thing has really become docile, very docile and tight. You know, look at that. That is very tight. Matter of fact, I think we're going to do one of those things we usually do when we see something very fascinating. We highlight it, like so. Look how tight that is now. See if we can change the color to that. Something a little bit more funnish. Let's see what that does. Nope, that's not it. So we'll go like this. We'll go to reverse. There we go, like that. And so you can see there, I mean, this is a very positive thing for the Turkish economy, to have a currency that's stable. Every country needs a stable currency. That's pretty much what it really comes down to. Not only the Turkish one, but all of us need stable currencies. That's part of the Federal Reserve's mission, is to try to keep, you know, keep things calm. That is what it is all about. We're just having to sip a little bit more tea, just enjoying ourselves. Because as we talk, you know, we dry out our voices, that type of thing. So, look at that. The buy comes in, but it's not even touching the middle of the range there now. That's nice. That's really nice. All right, let's check out the Turkish lira against the euro itself, which we find now to be the more accurate adventure that we watch. Right, where is it at? It's above it, isn't it? Somewhere right here. Jump out of this. Up, down there. There it is right there. Okay. Activate. Oh, we did have it. No, we didn't have it. There we go. So you can see right there, same situation. Really, really tight. Extremely tight. Looking very, very healthy. Let's just do the box again there, like that. And what we're going to do is we're going to make that like so. And I think we'll do we'll go like a white maybe dotted thing, or a yellow. Let's do yellow. That's kind of neat. And that's pretty impressive. I think the South American countries need to look at that. And what we need to do there is show you the widen it so we can see the buy and selling going on. No, not that one. Oh, this one right there. There we are. So it looks like we went into the buy right there yesterday. But it's not exploding, you know. It's not like it was before. It was ripping hard and fast, you know, tearing the hearts out of savers and, you know, investors and so forth. That seems to have passed now, which is kind of nice. Let's save that. Save workspace. And oh, let's go back to the dollar one and do the same thing. Let's save that right there. We'll change that color to the yellow, like warning, something's going on. In this case, warning, something good is going on. This is a good strategy. I like it more and more every week. Save. Save workspace as. There we go. And we'll see that there. And at the same time, probably Gbp Jpy probably got saved at the same time by me saving that. Save that too. I like keeping that filled in when we do. Gbp Jpy right there. All the lines are filled in again. Save workspace. There we are. Because I hate it when I go and look and it's like it's all gone. All right, from there, let's jump over to the Canadian, see what the Canadian is up to. And there's Canada. Let's check it out over here on J4X. There it is. And you can see there, you know, it's kind of lifting up. We're a little disappointed. Obviously, we're seeing the oil rise too at the same time, so that's not too much of a surprise. And the weekly is trying to turn. We'll see if that stays that way. You can see over here on J4X, same situation. It's just rising. We got 3 greens there to match up with our 3 green dots there. And what else can we say about it? That's about it. So I guess now what we'll do is we'll jump over and take a look at the oil sector, get a flavor of what's going on there. But I would assume it's flattened down. Right. Where is it? It's in here somewhere. Light sweet crude. There it is. 83.24. Just a little pressure on it, way down at the lows of the range, of course, as you can see on J4X there. See it right there. And then over here, let's see what we do. Oh, we got to go over here and do that. And then we go there. There is right there. Same situation. It's down. Pressure in a daily sell. The weekly is holding up pretty well in there. And you know, Canadian is really showing us that there's a little pressure, a little profit taking going on. Maybe the war drums every day they keep on talking about this imminent invasion thing. You know, I guess if they keep on saying it loud enough, maybe it won't happen. I'm thinking that's the way my head works. Say it over and over and over, and sooner or later it doesn't happen. It's kind of like a trade, you know, where you, oh, I'm going to buy it. It's going to go up. It's going to go up, and the next thing you know, it's going down. As we take a sip of our tea. All right. From there, what do we do? Oh, I know it is. We jump over to the South African Rand, and let's see what they're doing with that. I would assume. Oh, first of all, let's put gold up there real quick just to see what they're doing with gold this morning. Right there, and you can see right there, kind of flattish. Was down more. Oh, look at that. It's flirting with the daily buy across the gas line itself. And we're cleanly in that weekly buy thing. So I guess, you know, they're not taking it down too hard. It's just a little profit taking since that day there. And look at it. It's higher from that profit taking. So they're having a hard time selling the gold at the moment. I would imagine South African Rand would be flat to down maybe today. Yeah, flat to down. Let's see where it's at. Where are you, Czar? You're in here somewhere. There it is. It's flapped up. And we're getting a volatility signal. And this thing is trying to push up a little bit there on the daily. Let's throw it up on the J4X. Right there. And it's still in that weekly sell, so maybe this is just a little profit taking, and then they'll take that next run to go after that low. I'm hoping that they've been making lower lows. Lower low there, from there, lower low from there to there, lower low from there to there, and now we've made these lows here, which is starting to make the big challenge of this low. So Just one of those classics that traders like to watch. All right. From there, where do we go from there? We go to the ruble. Maybe this thing will go down. Look at that. That war talk that they keep on talking about has pushed it up to like 3-year highs or 4-year highs or something like that. I mean, they really pushed it hard. Since, matter of fact, it's more than that. I think it's like the Crimea highs. So, you know, that is the mess of it all right there. You can see we went to the buy there, and it's been tough. And it's been in a weekly buy throughout this whole mess. And they keep on making higher lows here, higher low here, higher than that low, and that's a higher low from there, and this is a higher low from here, and so forth and so on. Got very close here. I thought we were going to roll over because we did see the weekly trying to penetrate. Maybe something, warlike was probably changing for the better. And then obviously Mr. Biden is in so much problems here. I don't know how many of you realize they falsified all that Russian stuff under the Trump administration. So Russia was not really involved when they claimed it was. And so the Democrats, our socialists, really hate the Russians. Our socialists hate the Russians. They're angry at them because they screwed up communism and they screwed up socialism. I've seen things as crazy as in Wired magazine, right? In a tech magazine, they fantasize what would have been like if Joe Stalin had computers. I mean, he could have made socialism and communism work. That's what they say. They write this stuff. They actually put it in print. I say, instead of him killing like 36 million, he would have killed like 75 million. But they don't even recognize the fact that he killed 36 million or 37 million. Or that communism is credited of killing 100 million, So, as we take a sip of our tea, we see here, the ruble being pressured because our socialists in America hate Russia. Go figure, huh? Crazy stuff. Crazy times. All right, from there we jump over to the yen. You can see the yen is trying to lift back up. It's been in a sell for a few days, nothing major. It just missed going into the weekly sell last week, and you can see it's underneath this week right there. So there's a little pressure on it through that at the same time. What else can we say? I guess that's about it there. Let's go over to the the Mexican peso. See what they're doing with the Mexican peso right there. There we go. You see, it's been lifting up for about a week and a half now. And we've been in the buy, and now it's flirting with the weekly buy. I think currencies are going to have a very interesting 3 months, coming up. That may help set up the new trend of what's going on. I don't know how long this range thing is going to last, but it's been going on a long while. It gets through the range, and then it stalls out and breaks down and goes back down through the range again, and we see it in all the pairs trades. So there's just a matter of time before that. I would think that would be the last of the things that get cleaned up in the quantitative easing era. Or I guess we could say it may be the real indicator when something really happens, something really changes in there. So, that's where we're at. At this point, where a lot of people are wondering between January 25th, 26th or March 15th, 16th for the first interest rate increase. The question will be is how many pairs trades join in like England did last quarter. So that will be that literally could be part of the title of today's market. Gbp Jpy pairs, and how do they? That might be tomorrow's webinar. Literally looking at the idea of how will the pairs act before the policy changes, or how it changes with the policy. Do we see a real change in the trading range and the attitude about different pairs trades? So that will be the next. From there, we're going to jump over to the metals complex. And we'll look at the energy complex unless someone has a question. And markets are moving. We are seeing the stock market. The stock market has fallen almost twice the amount since we started this webinar. Dow Jones Industrial Average was down about 185 points. It is now down about 370 points. So, you know, as we said, yesterday is moving us back to normal. Nothing more than that. It is definitely moving us back to normal. That's exactly what we're seeing. This is not, you know, some type of crash or, you know, it's just money taking profits. That's the objective. How many times did I used to say in this webinar, if you have a position on and you're making money in it, and you don't take it off when you're making money, the next time you take it off is when you're losing money. And you're not here to lose money. You're here to make money. So, you know, it's just a heads up there, traders, that markets go up and down. They ebb and flow. Taking profits, getting long, buying cheap, you know, that type of thing. All right, let's check out silver this morning. You've seen gold. Gold was kind of sideways. And you can see they're putting some pressure on the silver there. Let's check it out over here. Where's that mouse up? Right there. And just find it right there. You can see they're putting a little more pressure on the silver than they are the gold, whereas the gold is sideways, as you can see just right here again. We'll put that up there. And it's sideways up. Silver is gold lagged silver. Now gold is holding up and silver is correcting a little bit. But we're still in the weekly buy. Over here on the J4X, you can see, you know, it's rolling over on the daily basis, and you know, we're not seeing the damage being done yet in the weekly. So this is a good thing. From there, we'll jump over to copper. See what copper is doing. The industrial metal itself. I know it went into a sell yesterday. There it is. You see that? A little more pressure on it today. Nothing major. Let's see what it looks like over in J4X. Right there. You see that pressure there. Guess that's about it. You know, we can. I'm looking forward to dissecting a little of the Dow and the current stock market yesterday, and see if we can see something from the pairs too. But we'll keep on marching along, get this done. There's the metals. No one's asking any questions, so we'll just keep on dancing until someone gets in there and says, "Hey, Doc, how about this?" And we go check it out. Let's check out. Let's see what Brent's doing on the J4X. See pressure there, a little pressure there down, just same way. You know, not going anywhere in price, just the internals, as they used to call them. The internals. When's the last time you heard anybody refer to technical analysis as the internals? That's been a long time. You know, with quantitative easing, almost all this stuff has gone out the door because it doesn't work as much as it used to. You know, in other words, it just didn't function. Let's show you we're going to show you, when we do that, we go over and look at the back month. So there's the June oil contract. Same situation, you know, just showing some weakness, but not really that bad. It's in a sell right there. Weekly looks very firm, and it's been in a weekly a week longer too. So it's not, they're not backing off this metals complex. It's not metals, I'm sorry, the oil complex. The energies are really there still. From there, take a quick look at nat gas. Right there. And that's the American natural gas. And you see that right here. There it is right there. That's the same one. You see that pressure that's been on it right there, like that. Jumped in the daily buy yesterday. That's interesting. You can see J4X has joined in here on the lines. And the hankies will join in soon if it stays up firm like this. Right now it's pretty much unchanged. And you can see the weekly's been in a weekly sell now for a while. Let's go back. When did it go into the weekly sell? Went into the weekly sell back in October, up in the $6 area of natural gas, and now we're trading at $3.92, as you can see right over here on that corner there. And you can see it right there, $3.90.27. You know, identical to the number there, $3.92 and $3.92. All right, now let's take a look at the cost of it in Europe. This is like at the point of the spear for Europe. You know, I mean, because right now, European gas, where's it at? Right there, isn't it? Yeah, that's it right there. European natural gas for the same quantity is trading at $28 compared to $3 here in the States. Excuse me. That's the war scare that's going on there at the moment. So that right there, that pressure. We don't have that contract here in the States. It might be on ice, but we don't get access to ice. So you can see that is there. You can see it being buried down here. That's good that it's trying to move back down. That's a positive thing compared to this massive, massive rampage. You know, I mean, look at that. I mean, you know, going back to 2000, it was trading. Used to be a great arbitrage, supposedly, between European and American. But boy, has this gotten insane, just insane. Now, from there, let's jump over to, let's see, so that's the gas. So that's pretty much, that kind of finishes up the energy side of this thing. And so let's now go over to the stock indices and we'll take a look at that. Unless anybody wants to see something, you want to see something, just shout it out. Don't be afraid. Don't be scared. Let's see, where are we at here now? Let's go to Tech 100 right there. This is like super, super, super volatility because most of these stocks in this 100 index are really what they call interest rate sensitive. So they feel that they're a higher they've always been a higher beta, higher volatility. They always have been. And so, you know, these are tech stocks. And so you can see here, we've taken out, you know, like the October lows yesterday. When's the last time we got down to that area? I think we showed it with the Russell. There's June. Was it June? What was the low there? The low was, let's see what the low was. 13 something? 13.7. Okay, so 13.7. So basically, the low of June of last year's spring, we got down into that area there. Matter of fact, it looks like we went after the July, no, what's that, the May number lows, or in this case it was the May highs, you know, right there. So we hadn't been this low since May of last year. And you can see there, that's that action there. And let's see if we can shift screens and show you the intraday of it yesterday and today. Let's see, where is it at? Let's go to there. And let's put it up on, let's see, let's go to a 900. Let's do that. There it is right there. So let's show you yesterday. There we are. And let's go back to yesterday's trading. And we'll show you that ebb and flow that we talked about. So the product was trading at, what was that, 14,200 basically, you know. And, you know, it was acting pretty well. Let's see where it closed on Friday. At that point, this thing was even higher, 14,300. And let's see where they settled it on Friday. Where did that mouse go? I'm using, yeah, that's right, I'm using the right mouse. So there is the 24th. Okay, so right there, it started off and it settled on Friday at like 14,540. So it was basically 500. We're going to use round numbers because it's wild and woolly. And you can see it trades in the 300 area, so it's only down like a couple hundred points. And then, let's see where we at. Let's start off with 8:30 in the morning. New York open of a Monday morning. So 8:30 is the start off point here on the chart. You know, Chicago time. Hence Chicago point. You can see here traded up to, what's that, 300 and change, or 250. So it's only down a couple hundred points. And so the market's not bad, and it slowly drifts, and you can see it's down about 400 points. It gets down about 500 points right there. Well, about a little under 500 points, and then it rallies back up after about 20, 30 minutes. It starts to lift again. It gets back up to 200 here, only down 300 points. In other words, real ebb and flow action. And you can see there it climbs again. It's heading in for the first hour here of the day. We're only down off about 250, 300 points. And as the selling starts to come in, and it starts off, I guess it's around, I thought it was around 10 o'clock Chicago time, but it was like around 10:30. And then they started drifting it down, and it fell from there to 800. I mean, it dropped down to 13.8 from 14.5, and from Friday. So we're down 700 points, and then it moved back up into the 13.9, and then it gets back up, just up to, about a half hour later, we're up to about 14.1. You're only down 400 points again. In other words, there's real trading going on here, back and forth. Ebb and flow, not spikes. There it is. There's almost the high of the day itself, but still off a couple hundred points from Friday. And you can see here it gets up to, up to 13.4 after being down over 700 points. So it's only down 150 points, and it was just slow, steady, good action to the point where it goes literally almost plus for the day. Where's it at? Up in here. There it is. It's over the 500 area. So, and that's real ebb and flow market. Not crazy big giant spikes done. It was easily consistent. Now this morning, you can see this is our low of the day right there of 14,131. So we're challenging the 14,000 area again. We're making that move. Playing around with it at the moment. The low is 28 for the day, 14,128. So, it's ebb and flowing. We're seeing that type of action. Oh, here we go. What's it? Kevin says, can I trade 5,000 lots on Dukascopy? I don't know. You mean in Tech 100? I imagine so. But that's are you an institution? Is that what it is? I would assume that their parent company is Swiss Bank, so I'd imagine you'd have no problem. I'm sure they can facilitate good markets. Or a 5,000 lot in currency. A 5,000 lot in currency, I would assume way easier because that's a small number. But I'd imagine so. I mean, Swiss Bank is their parent, so I'd imagine they have good lines of execution. And 5,000, if it's 5,000 Tech 100 versus 5,000, British pound, two different creatures. Let's see now. So that's been pretty much the action, and let's give you just a general idea of what's going on at the moment. Right there, you can see the S&P 500 down 70 points. Yesterday it was down like 160 points. I think it was down 160. I think that was the exact. Let's put it up. There it is right there. So the low yesterday, let's see if I can show you this right there. And let's put it up on J4X. The low yesterday in the S&P right there was, what was the low? The low was 13. Oh, wait, that's NQ. So let's do this. There. So yesterday's low was 4,407. No, I'm sorry, 4,212. 212. And we're 120 points away from yesterday's lows. We're trading, as you can see here in the right corner. Where's that mouse at? Right there, we're trading at 4,333. Trading major forex pairs. Oh yeah, that's a small quantity. 5,000 is a small quantity. There's no problem there. And it all comes down to how much capital you have in your account. So you can see here they're putting pressure. We're at the lows of the day basically um, in the S&P 500, and they may sell again today. I mean, interest rates are going to rise. It's going to change the way institutions follow numbers. They're investing. Yeah, so like British pound, euro, Swiss, so forth. Yeah, like I said, the parent company is Swiss Bank, so there's no reason why they'd have they won't have liquidity of execution. All right, what else can we show you here today? Basically, we're at the end of the day here, but at least you got a flavor of the market's moving back to, um, you know, moving back to basically reality. And what we're going to do is, we're going to monitor that and so forth. We saw interesting stories about debt across the planet last night. We didn't even bring that up, but there's a lot of interesting stuff going on there. And that's really what it comes down to. The reason why interest rates are kept low is because of the debt, the amount of debt outstanding. All right, so title today, we're going to call it Gbp Jpy, which is such a good pairs trade. New normal and Marcus. I think that's really what it comes down to. There we go. All right, this is Doc from North America. Catch you all tomorrow. It'll be Wednesday. Happy to hump day. What was that? 5,000 months is about 5 million units of currency. Yeah, exactly. Exactly. Where am I at? Oh, yes. Happy trails to you until we meet again, which will be tomorrow. Happy hump day, Wednesday. Happy trails to you, to all our trading friends. Ta-ta, traders. And tomorrow we will look at the pairs trades and the normality. See if we can find that normality that we were used to back in 2008. And went on for hundreds of years.